Consumer fraud in the United States is a growing problem where individuals are tricked into losing money or personal information through scams, false advertising, identity theft, and online deception. Understanding its types, laws, and prevention methods is essential for consumer safety. Consumer fraud in the USA refers to deceptive practices that harm buyers financially or personally. It can happen in everyday life, online shopping, banking, insurance, phone calls, or even social media. Fraudsters use advanced tricks to exploit trust and steal money or sensitive information. What is consumer fraud? Consumer fraud occurs when a person or company intentionally deceives consumers for financial gain. It includes false promises, hidden charges, fake products, identity theft, and misleading advertisements. With the rise of digital platforms, fraud has become more sophisticated and harder to detect. Types of consumer fraud in the USA. Identity theft. One of the most common forms of fraud, identity theft happens when criminals steal personal information like social security numbers, credit card details, or bank account data. They use this information to open accounts, take loans, or make unauthorized purchases. Online shopping scams. Fake websites and sellers attract customers with extremely low prices. After payment, the product is never delivered or is completely different from what was advertised. Credit card fraud. Hackers or scammers gain access to credit card information and make unauthorized transactions. This often happens through phishing emails, unsafe websites, or data breaches. Investment scams. Fraudsters promise high returns with little or no risk. Ponzi schemes and fake cryptocurrency investments are common examples. Many people lose large amounts of money in such scams. Telemarketing fraud. Scammers call consumers pretending to be bank officials, government agents, or tech support. They pressure victims into sharing sensitive information or sending money. Insurance fraud. Fake insurance companies or agents sell policies that do not exist or refuse to pay claims after collecting premiums. Phishing scams. Fraudulent emails, messages, or websites trick users into clicking links and entering personal data. These attacks often look like official communications from banks or companies. Impact of consumer fraud. Consumer fraud has serious consequences for individuals and society. Victims may lose savings, face damaged credit scores, or suffer emotional stress. In severe cases, identity theft can take years to resolve. On a larger scale, fraud reduces trust in financial systems and online services. Businesses also suffer losses due to chargebacks, lawsuits, and reputational damage. The U.S. economy loses billions of dollars every year due to consumer fraud. Laws and protection in the USA. The United States has strong laws and agencies to protect consumers. Federal Trade Commission, FTC, the main agency that handles consumer protection and fraud complaints. Consumer Financial Protection Bureau, CFPB, protects consumers in financial markets. Identity Theft and Assumption Deterrence Act makes identity theft a federal crime. Fair Credit Reporting Act, FCRA, ensures accuracy in credit reports and protects consumer data. Consumers can report fraud to these agencies, helping to track and stop scammers. How to prevent consumer fraud. 1. Be cautious online. Avoid unknown websites and always check for secure HTTPS connections. 2. Protect personal information. Never share passwords, OTPs, or social security numbers with unknown callers or emails. 3. Monitor bank accounts regularly. Check transactions frequently to detect unauthorized activity early. 4. Use strong passwords. Create unique passwords and enable two-factor authentication. 5. Verify before trusting. Always confirm offers, emails, or calls directly with official sources. Conclusion. Consumer fraud in the USA is a serious issue that affects millions of people every year. As technology grows, scammers become more advanced, making awareness the strongest defense. By understanding different types of fraud and following safety practices, consumers can protect themselves and reduce the risk of financial loss.